Cadbury tells shareholders to reject Kraft's offer. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Joining us now live from London is Neil Buckley. So, Neil, it appeared momentum moving in Kraft's direction last week. Now it's over. So Cadbury's statement today, I mean, it's encouraging its shareholders to reject Kraft's offer, right?
Yes, we've seen in the last week or so a narrowing of the gap, significant narrowing of the gap between Cadbury's share price and the value of Kraft's offer. That's because Cadbury's share price fell a bit after Nestlé said it wasn't going to make an offer for the company. We've also still seen no competing bids from people like Hershey or Ferrero. We had an intervention last week from Warren Buffett, who's a big Kraft shareholder, which actually helped to boost the Kraft share price. But I think this document today is going to steady Cadbury shareholders' nerves a bit and help convince them to hold out for a higher offer from Kraft for the company.
So you spoke about this document. I mean, what else is new in there that we need to know about?
There's not a lot that's actually terribly new. A lot of it is a restatement of what they said before, but there is confirmation that Cadbury's revenue growth performance, 5% increase in organic revenues last year, was very strong given the economic environment and stronger than a lot of Cadbury's competitors, including Kraft, we have to say. A good performance on increasing the operating margin. And very importantly, we do have now a solid figure for earnings before interest, tax, depreciation and amortization for Cadbury last year, which allows us to value Kraft's offer at 12 times EBITDA. Now, that is a lot less than similar offers for other food companies in recent years, which have ranged between 14 and more than 18 times. It does therefore make Kraft's offer look low for a company which I think analysts and Kraft itself agree is a very good company. So it's going to strengthen Cadbury's argument that that Kraft's offer is undervalued.
So, Neil, I mean, how are things likely to play out now?
Well, Kraft has a deadline next week, January the 19th, under UK takeover rules for raising its offer unless someone else has come in with or unless someone else comes in after that with a competing offer. We just don't know whether Hershey or Ferrero are going to come in or not. There have been reports that Hershey is still considering making an offer. Ferrero is apparently in Italy talking to banks about taking a loan from them to make an offer. But I think there's going to be a lot of pressure for Kraft to increase its offer anyway from what is currently valued at about 763 pence per Cadbury share up to somewhere around 850 pence, whether or not there is any other bidder in the meantime. There's a lot of pressure on them now to convince Cadbury shareholders that they really are prepared to pay a decent price for this company. Then we have to wait and see whether there is a competitive bidding situation for the company. At the moment, that's looking a little bit less likely than it appeared a few weeks ago.
Neil, we thank you so much. Neil Buckley joining us there from the FT in London.